Thank you very much. So, like we just heard, the title of the panel is Digital Asset Marketplaces Fostering Adoption. I think that's quite a broad topic, and in order to really understand what we want to talk about in this panel, we need to first set some ground rules for the discussion, like, for example, what kind of digital assets are we talking about? What do we understand as a marketplace here? So that's how I'd like to get into the panel and start the introduction route as well. So I'd start with Michael. Maybe you can tell us a little bit about yourself, and also for you, what you understand here in the term digital asset and what that has to do with what you do at 360X.
Yeah, thanks a lot. I was hoping that I'd be the last, but so, okay. So my name is Michael. I used to run the R&D division and venture capital arm of Commerzbank, and probably that was still the reason why you invited me. Now we founded last year a startup, 360X, which is basically a secondary marketplace for real assets. Talking about digital assets, in my view, everything is a digital asset. Now the question is, when we start to tokenize digital asset, then we get a little bit more in the debate.
Thank you. Yeah, Till, if you go on, and we'll just go around this way.
Yeah, thank you, Maximilian. Hello, everyone. I'm Till. I'm the founder of Hardstocks, a startup that was founded 18 months ago. And we've built the first marketplace that fully runs on the blockchain in a banking infrastructure that gives out equity shares that we will make tradable as well.
So, hi everyone, it's Alireza here. I'm a German-based lawyer. I'm a lawyer of Anherten. So for me, digital asset is actually very simple, because from a legal perspective as a lawyer, so you should look at digital assets by saying, is it a fungible asset, is it a tradable asset, and is it an investment asset? So if you have these three categories, then you can also still discuss about equity and debt, so we come to that later. But this is very important to then to have the regulatory classification and to see what you need to build up a digital marketplace.
My name is Ivica Aratic. I'm the CTO of Swayat GmbH. And this is a company founded, it's a spin-off by DK Bank Deutsche Girozentrale. And we started, let's say, 2 months ago. And as you can see, so we are coming from a traditionally strictly regulated environment, and the kind of the assets that are interesting for us are crypto securities, like we just saw, presented by Michael, and STOs in the sense of being registered bonds. And not only the new shiny things, but also the on-ramping the traditional assets, so bringing the old and the new world together into one pool and making some efficient, let's say, first settlement layer for traditional players in the market, and then building on top of this pool, connecting marketplaces. And the first marketplace that we went for is some specialized one. It's about collateral trading and about securities lending.
Thanks. Last but not least, my name is Frank. I'm co-founder, CEO of Invao Group. We are a digital asset manager based in Liechtenstein. By the way, we started already back in 2019 with the first tokenized bond structure under Liechtenstein law in Europe. I can tell you later, it was mostly a nightmare. That's the reason why I think we should also discuss the other way around. So not to bring traditional financial products to the blockchain, but bringing digital assets to traditional finance. And it's what we are doing out of our offices in Switzerland, Liechtenstein, and Germany. So traditional fund structure and asset management services.
Thank you, everybody. So I think a wide range of digital asset experts we have here on different niches. And so the first thing I would like to get into then is the question whether or not, do you think, and I'll start with you, Frank, do you think we will need, especially in the space of digital assets, we will have one marketplace at the end, let's say in 10 years, that is covering all these sorts of digital assets, because after all, we are kind of digitalizing, right? And efficiency is one of the key forces driving our innovation here. Or do you think it will be more like in traditional assets, we have different marketplaces for commodities, for stocks, and so on?
Yeah, as I already said before, so I'm by nature, I'm an innovator. I really like this. Yeah, I never had a job where my mom could say how I make my money. So, internet, mobile, and now blockchain, and she's completely lost. So I tend to say, okay, let's take a bond, let's tokenize it, let's put it on a security exchange. And I just noted from one of the speeches before that a security token exchange is expected within the next 3 years. That's a good joke, because that's what I'm hearing since 2018, and we are now in 22 even. Yeah, so yes, that's what I really prefer, and bring everything on the blockchain, taking the banks and whatever out of the game. I love it. On the other hand, the adoptions are already happening, and we have these big opportunities with digital assets. So for me, the easier way and the more natural way is to bring these assets into the system of traditional finance. That's hard enough. But the benefit is we talk about today and not in 3 years.
Thank you. And I know on the other side, we have, I think, some other interesting opinions that we also spoke about during the prep panel. Michael, for example, I think you have some interesting thoughts on the distinction specifically between primary and secondary marketplaces here when we talk about tokenizing real assets, tokenizing securities. Anything to add on that topic?
Well, sure. As we come from a, we are embedded in Deutsche Börse Group as they are one of our main shareholders, although minority. We ultimately, they look into shares and stocks, and traditionally they look into things like cryptocurrencies and currencies, and we only look in real assets. So what I'm saying is, respectively, for real assets, I don't see the difference between primary and secondary. From our point of view, it's just someone selling to someone else. And you can do that with the current regulation, so it makes a lot of sense. You're still going to have an issuer who's going to be involved. Nevertheless, what we have to keep in mind is, as we are, and there I'm with Frank, we need not to go interoperability between different blockchains. We need to talk, how can we integrate it into the legacy or into real systems? Because not fix something that actually works 99.7%, because bond markets actually work. What's the point of putting blockchain to it? So, it should address things that you cannot do. So, from my point of view, one of the issues you're going to face is, if everyone's talking about DVP 0, you're not going to have any liquidity, as in zero liquidity, because you cannot do a market making if you have an NFT. If you have DVP 0, no one's going to make a two-way price. So if you select to do delivery versus payment 0, that means, in consequence, zero liquidity to that market. As we are a marketplace, we need to really consider what we want and what's the embedded benefit to that.
I don't know if I may add here something. I think there are different perspectives on that, because you could say that what we have already here, it's working perfectly well, and you do not need to replace something. And then if you start doing something like instant settlement, and then you are disturbing some balance sheets, like these people have to rethink how they do things. Yeah. But we're also observing from our experiments or our first trades on the book that we did in the context of securities lending and collateral trading. It is a great innovation to have instant settlement, because it opens a new sort of use cases, like you can do then intraday collateralization without having to use cash or things like that. Yeah. And I think we have to connect, I don't know who said it already, we have to connect the old world with the new world, and we should then see which features actually will prevail and which of them will be useful. Yeah.
Understood, yeah. So I think if we take a step back and we think about, okay, what do we actually need for a marketplace for digital assets to work, right? Michael mentioned, clearly you need liquidity for any marketplace, but what else do we need? What do we need that we might have in the traditional world that hasn't really been passed on yet, like talking about brokers? Are we talking about centralized or decentralized exchanges as marketplaces for these assets? And like you said, the secondary market for security tokens we've been waiting for it for a while. So what are the obstacles that we see here? Maybe Alireza, you can take that to start from the regulatory perspective, maybe.
So yeah, I was just listening, was very surprised listening to that stuff. I mean, I'm working with startups, I'm working with banks, I'm working with crypto exchanges for some time already, since 2014. And I can tell you, I was a little surprised, Frank, when you said we do not have a securities exchange yet. I mean, what is a marketplace? What is an exchange? A marketplace and exchange is, and I'm also contradicting to you, Michael, I distinguish between, as a lawyer, between primary and secondary market. A primary market is a market where you issue your first instrument, like a first NFT. You're the creator, you issue that. That's a primary market. And if you take that and you trade it, either peer-to-peer or you trade it with a counterpart, with a market maker, that is for me secondary market. And I think we have that already. We have that already in Germany. For having a marketplace like that, you need a couple of recipes, yeah? So you need an issuer, first of all, it's a beginning. Then you need maybe a custodian, depending if it's a crypto asset. If we talk about digital asset, a crypto asset. Then you need a broker. You need a market maker. And for bringing the liquidity in, then you would also need maybe an exchange, a traditional exchange, which is going to connect with the platform we have built up. And looking at the current market, I can give over to Till. They have a product which I would call it this. This is a security marketplace built up with regulated players, and which is going to be, in my opinion, soon something which we can call a securities assets exchange within Europe.
Thank you, Alireza. I think what Maximilian said is a good point. You have to connect the dots if you want to build a fully marketplace. And this is exactly what Hardstocks did. We're cooperating with 3 financial institutions based in Germany, one that is doing the custodian for us, one that is doing the trading, the market making for us. But you also need a fully regulated prospect, and you need a Wertpapier prospect with a fully ISIN. And I think this is what we do not see today, that a startup or a company has put all of those dots together. And this is what Hardstocks is actually doing right now. We're a company based in Liechtenstein using a regulation that is, in our opinion, very innovative, because the Token Act in Liechtenstein allows us to put property rights into equity companies. And then if you give them a prospectus, you can passport them through whole Europe. And if you then have a fully banking infrastructure that is regulated, then it's actually quite possible to build that kind of marketplace and also connect to exchanges, connect to brokers that make all those illiquid assets liquid. And I think that's a good point, what Michael mentioned, that when we talk about tokenization, we actually have to look at the private markets. We see private equity, we see tangible assets like Michael mentioned, but we also see IP rights or infrastructure. Until today, they are not fungible. No one can trade it, no one can actually use it as a security. And I think this is when the blockchain comes to a very interesting point. We've put the register on the blockchain, and this allows us to do capital increases in less than 2 minutes. And I think this is the innovation that the world needs. And then you have to put this innovation in a traditional system that already works today.
Till, I partially agree. But in your previous life, we worked together with the placement of our tokenized bond. And we both maybe can remember all these events with all these people coming from traditional finance, sitting there, being grateful for free education about crypto. And then, wow, what is next? That's complicated. I don't get it. I never did it before. So coming back to your question, what do we need? We need the money. We need access to the money. Yeah, and I think it's easier to bring traditional or bring capital, bring money to traditional products to the blockchain than doing education again and again. Again, I love the innovation, I love the idea, but it will take time. That's what I learned.
Go ahead.
Maybe. No, just 2 things. One question I'm going to ask Alireza. But before that, as this panel is about digital assets, and we are also in the music business, so basically what people totally forget, in particular in this conference, everyone's so focused on securities. But if you're making a drop that is worth 25 euros or something, most of the clients that follow a musician don't even have a depot. They don't care about an ISIN. They don't care about security. So if you're selling someone an NFT drop that's worth 25 euros, 30 euros, and so on, you need to put it in a way that is on the smartphone. The good thing is, it's not a security, it's not regulated, you don't need an offering circular, unless you make it for investment purposes, and then the whole bunch here gets involved. But typically, it's something that people collect because they love their artists, they want to engage with them, they want to show it to their friends on their mobile phone, this is what we're doing. So we really need to say, and this is 90% of the real world out there. Only 10% have a depot in securities. So it's a very tiny subsector of what we're talking. So we're all focusing on, let's do a security, EVPG, whatever. But actually, it's not relevant to 76 million people in Germany, out of 80. The question I had, because, and maybe there was just a trick question for me, Alireza, is you mentioned having an NFT with market making. Explain to me how someone is going to make a market in an NFT. I just don't understand. I come from a trading background. That's my background. So how do you make a two-way price on something that only exists once?
Alireza, if you want to, otherwise I think a good point to summarize is to go back to the idea that we will have different marketplaces for these different ideas, right? Something like Michael mentioned, these NFTs that someone buys for 25 euros because they love their artist, they want to support their artist. That needs a different infrastructure and maybe a much, much less complicated infrastructure than if we're talking about tokenizing securities. I think that's where a differentiator comes in. But of course, feel free to comment as well.
Yeah, I mean, that's a good point. I mean, let's discuss that. I mean, I just want to clarify one point. You're looking at the retail market. The retail market, I'm absolutely agreeing with you. Most of the retail people that don't care if it's a security, if it's a normal financial instrument, if it's a crypto asset. But when we talk about the investment industry, the institutional investors, the fund managers, they have requirements. They have requirements by law where it says you're allowed to invest in securities, you need a prospectus, and you need a liquid market. And this is something you cannot offer that without having a prospectus and a liquid market. And this is when you look now, for example, the German law on electronic securities, where it allows you to tokenize a fund share, or where you allow also funds to invest in crypto assets. These are all things which are giving you the legal background to do something with it. And if you don't do it and you say, okay, the retail market doesn't need it, right, the retail market doesn't need it, but the institutional market needs that. And this is the point. And I believe that for you, for hard stocks, if I would be like an asset manager or someone who's managing a fund, I would think about it if I could invest in your assets and make a nice return rather than having minus 0.5% or something like that. That doesn't really make sense. So, and coming back to your question, yes, you're right. So an NFT by definition is non-fungible, which means it's unique. You cannot swap it one-to-one. It's not a security. Therefore, looking from the old world, from the old securities world, you cannot make a market making with NFTs. But looking at the new world, in the innovative world, we can look at OpenSea, for example. OpenSea is already something where you can trade your NFTs. It is not a market maker, right? But it's a marketplace. And if you would add to that some participants who would do the trading, who would call the order and would do that, then you would have, in the end of the day, a new kind of market making. And this is what I'm trying to explain. Not look back, look forward, look to the future, and look how to do something in a new way. And I can give a nice example. 1inch, for instance, the two founders of 1inch, none of them is a banker. None of them come from the traditional market. But they put up, these two guys, they put up a DEX, which is running very nice, very nice. They have attached to that market makers and do everything very nice. And it works without looking in the past because they were looking in the future.
I think we all can agree that we have different types of customers and different types of marketplaces. Yeah, for instance, buying $20 NFT is pretty much different from buying 100 million bond somewhere between two institutions. Yeah, but what they have in common, and I mean, you ask for successful marketplaces, and there are many key factors, but I want to stress one. namely standardization. Yeah? And I think in what we're observing in NFT and DeFi and so on, and it's a really good preview how financial market infrastructure could look like, yeah, in the future. It's a really great preview for me. But then when we look again onto things like crypto securities and STOs and so on, we can observe there is a lot of room to do standardization there, and I think standardization is one of the keys which would drive successful marketplaces. Yeah.
So then, looking back at markets that are already standardized, right? Like Frank said, okay, why don't we use traditional markets that are already existing, already working, using that infrastructure to bring our new assets onto that? I think, Frank, I'd like to ask you, since I think you've probably spent some time thinking about that already, and you've tried the other way as well. What do you think are some of the key factors that are going to make this, let's say, backwards approach easier or better?
I wouldn't call it a backwards approach. Yeah? It's more, you know, I'm an entrepreneur and business for some decades. Yeah, and what I learned is better you follow the money, and the money is in structured systems. Yeah, so I have to help them to go over the bridge and invest into this new asset class. So that's why we need financial products for them. I'm talking about institutional money. I'm not talking about the $25 NFT. That's a completely different story. I agree with you. So that's my core belief. Yeah, when we started back in 2018, even, and with this tokenized bond, what was really a hard learning for me, that not the product was shit, not the asset class was shit. It was the way they could not find the way how to invest into it. Yeah, and so that's why I decided to put more brain work into traditional financial products for digital assets. And just one more sentence. One of my best teachers here is Michael Saylor. I never understood how can this guy sell shares of MicroStrategy, and if you see all the bitcoins the company has, then you see there's a premium of 30% on it. 30%, you pay a 30% premium. It's a very, very simple reason. Because you're buying stocks, you're not going into Bitcoin. That's worth the difference. And there's a liquid market on it. So you can share it to another guy with this 30% premium. So maybe simple answers to complex challenges.
I think that's a good point. We have about 5 minutes left. So we were talking now about marketplaces, digital assets. So for the last 5 minutes, let's talk about adoption, actually, and how they are fostering adoption. And I think one of the interesting points that was made during our prep call by Alireza was saying that, well, if we look at the example of, for example, Timeless, we can see that the end user doesn't really see that they are using digital assets. And I think, again, there will probably be a discrepancy to people that really want to have an NFT and show, hey, I bought this NFT, it's on my phone, and it's cool, and show it to their friends, versus the kind of structure where you don't really care what technology is underneath it. So I guess the question for us should be, do you think it is beneficial to hide the technology underneath and just have a marketplace that people can easily understand and they see and they buy their sneaker? Or should we actually try to keep this idea of digital assets underneath it strong so that it really gets integrated in society and people really understand, hey, this is on the blockchain? Somebody would, I don't know, I think Alireza, if you would like to take it, because...
Sure. I think we cannot really stigmatize that. We cannot really say, this is the one recipe which works always. So for Timeless Investments, they have a very nice user experience, but they target a specific group of people. And for this group of people, the technology is not important. It's rather important to have some emotional connection to the collectible, like to the sneaker, to the watch, to whatever. And for them, it's not really important. Is a Polygon blockchain use or some other technology? It's not important. But for others, for instance, if you look at the Bored Ape Yacht Club and you have an NFT from there, and then you realize you have really the NFT and you can claim now the ape coin, then it becomes interesting. It also becomes interesting if you already have claimed your NFT and it's already lying in your wallet and you know which technology you're using. You're not using the Flow blockchain, for instance, where you cannot have really a marketplace because it's not really liquid, it's not really working. And then it becomes really interesting. And so this is a different example to say, it depends on which product for which category of users you're looking at, and you cannot stigmatize.
So, Till, what's the approach you're taking with hard stocks there?
I think it's always good to use innovative technologies. If you look at the situation today and think about how a shareholder register is working out today, then we see that actually for every share that ever gets emissioned, everything happens analog. So why don't we use technologies that helps us to gain efficiency, to reduce costs that we see in the traditional private markets, for example. And this is why we decided to run our register fully on the blockchain, because we are able now to see any transaction to any time, whenever we want. We are able to contact any financial market authorities and show them our registers, show them transparency. And this is where the blockchain, in our opinion, makes sense. And those efficiency gains and cost reductions lead to the conclusion that we are now able to make something fungible, which till today is not. And if we see the private markets and who invests in those private markets, then we also recognize that a lot of investors, like myself, for example, cannot participate on the best investments of the world, for example, venture capital, private equity. And I think this is something we have to change altogether and push boundaries, and this is what hard stocks actually stands for.
Well, adoption is a very broad term here again. So are we talking about adoption of NFT market, like people buying more NFTs, or are we talking about custodian banks buying into some sort of new security that we have and so on? And I think the main point is when you try to go into the mainstream, the first thing is that you have well-structured regulation. Yeah? So this was one of the topics that we had in one of the presentations. And the next thing is to overcome the chicken-egg problem. Yeah? And I think the key players for that are the large institutions that can act as investors and also can act as issuers, and then try to start to circulate larger volumes, which will create some gravitas. Yeah? So, from my perspective.
From my point of view, I mean, we took a conscious decision. We are not connected to a blockchain. So we trade tokens, but we are not connected to a blockchain at all. So my statement in terms of should we use technology just because it's new? Let's use technology that works. That's my take on it. Number two, at the moment when you talk about crypto, it's a very poor experience because someone's going to tell you, download MetaMask or whatever, then you're going to get 12 words, never lose them, and then buy some ETH in order to get started. That's a very bad user experience, in my view, because normally you go somewhere, open an account, and then you can start. So I think we really have to consider a couple of stuff before we entertain new technologies, because it may not be as user-friendly as we may think, or it's only to a niche market that ultimately think it's great to use the latest stuff. And I'm getting quite concerned about a couple of stuff. So if you look at NFTs at the moment, everyone's fancy about ERC21 and so. I don't know if everyone's aware that, if we upgrade that, you're going to need to carry on, in my humble opinion, technology-wise, your old wallet. That would be the equivalent if someone said, you got paid euros in 2000, you're going to have a separate IBAN account that you need to carry. So we need to consider how technology is really evolving before everyone is catching on, before we really build an infrastructure and people to jump on. So let's make sure that we use technology that works and not just because it's new.
Thank you, Michel. I think that concludes our time. So that was some very strong closing statements. Thank you, everybody. So we are going into a lunch break now until 2 p.m. And at exactly 2 o'clock, Frank will actually be holding a presentation. So I recommend you all be back here in time and enjoy the food. Thank you.